U.S. futures shrug off Spanish downgrade, pushing higher at this hour. With weekly jobless claims, trade deficit data, and import prices ahead for investors, along with a handful of earnings. Can the market build on the morning gain? I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with theStreet, and together we bring you the morning call. The market's been under pressure at the beginning of this week. We're up about 5.5 handles now as we got that Spain commentary out of the way with the downgrade. We also have Citigroup Global Strategists taking up their bullishly biased view to the end of 2013. So I guess the question is that momentum going to continue through today and going into JP Morgan and Wells Fargo's earnings tomorrow?
Right, well, at this point, I think the oscillator is down about -50. So we were ready for a bounce after 4 down days. The last thing you want to do is be selling into that 4th day like we had yesterday. The right way we try and teach you is to sell some into strength. You know, when key moving averages like the 8 and the 21-day break, maybe you lighten up. So when you get down to the 50-day, it could be opportunity. And we talked about covering shorts yesterday to see what type of bounce we get, and that's what we're going to be looking at moving forward. You know, do we get a feeble bounce or do we get some kind of potent bounce with the help of the banks? Because the banks have been acting strong, JP Morgan, Goldman Sachs, Wells Fargo. So I think that's very important for tomorrow. But right now I think traders are just treading very lightly.
Well, it's really interesting because IBD is almost saying the exact opposite of what Citibank has said and also what Goldman Sachs said last week, taking up their bullishly biased view. And they think we might be going into correction mode. So when we take a look at the SPX, what are they seeing?
Well, the question is what time frame do you trade? So when you're up 15% or so in the S&P for the year, you know, do we pull back another 2-3% before we rally into the end of the year? And that's what traders that trade on a shorter term time frame are trying to figure out. Because if you do look at the chart of the S&P, you will see, you know, ever since that outside day back here, you know, we are almost about 300 handles higher. And ever since the June 4th low, you know, you're about almost 200 handles higher. So with that being said, you know, a little correction is healthy, but everyone's, I think, a bit spoiled right now. So that's why I try and show you the trends. And if you look here, you will see that here's the low on June 4th, and here's the gradual uptrend, which we were just testing yesterday. So if yesterday was the low, you know, then there's no pain. We continue. Maybe short-term, Citigroup and Goldman Sachs will be right. You know, but you also talk about even a shorter-term uptrend. This is the one that a lot of guys follow also that, you know, got broken. So I would say right now, in order for us to be healthy, or just say actually in order for the bears to keep some pressure on, because they have had the pressure on, they shouldn't let us take back more than half of this move. So you have a level here at 1440, and then you have one a little bit higher around 1448. So if we bounce up to here and can't continue, guys that probably were short into here and covered yesterday, they're going to be looking to reshort this area to potentially take out yesterday's low, test the 50-day, and maybe even go a little bit lower. But for right now, I think yesterday was a day to cover, and now we need to see what happens moving forward, you know, treading lightly.
Right, and I also think that it's probably going to be relatively quiet today because all eyes are on JP Morgan. Everyone cares what they're going to say in terms of internal risk control. Everybody cares what Jamie Dimon has to say because it really is a barometer for the market, for the economy, for a lot going forward. So we'll probably be a little bit quiet today. And then once Wells Fargo and JP Morgan, that uncertainty of what they're going to say comes into the market, then we'll really start to see that Q3 earnings volatility come in.
Yeah, well, let's hope that they actually meet the expectations or talk, because expectations are high now. Everyone, you know, you turn on the team, you see it turn on everywhere. Everyone's saying, you know, the bank's earnings should be good, and they have been showing the relative strength leading into it. So let's just hope there's not a disappointment. And if there is a disappointment, I bet you that 1440 or 1445 will contain this bounce that we're started this morning with the futures shrugging off Spain's downgrade.
Moving along to the sector spotlight, we're going to talk about the ag space, in particular the fertilizers, which happens to be my 2012 pick. We have a very key report coming out at 8:30 a.m. Eastern, the WASDE. It's the Agricultural Supply Demand Expectation Report. Comes out monthly. It's almost like when the retail stocks report same-store sales each month. You have that volatility event that we kind of trade around. We're going to be looking for key themes with application. You start talking about fall and spring application, looking into 2013, supply-demand expectations, weather trends, little South American conversation in there. So we really want to focus on what we see for yields and what we see for demand going forward. We're going to kick it off with my 2012 pick overall, Mosaic. I love trading this name. It happens to be one of the more volatile names in the group. We had a nice uptrend. We're pulling back a little bit. I still think at these levels, 54 is a very key support line that we could see another 20 to 25% on the upside in the longer term.
Yeah, well, this is one you definitely had to maneuver and had to get in the right time and sell the right time. It had a nice move since the summer, and then it's got a little toppy. If you look at the chart right now, if you were looking to buy a dip, it just came from about, 62 all the way down to 54. It's coming into the moving averages right now. So at this particular point, it's not real. It's, it broke a few areas where if you wanted to sell, we talked about this last little wedge type pattern right there, this pattern that once it resolved to the downside, if you were a trader, this was your out. If you got out right around here, you had the luxury of retesting support. And as a fundamental investor, you always want to buy a little bit on support, which, this is a decent area, and then add to it when it gets in motion. So at this particular point for traders, I don't think many people are going to be looking at this until it starts getting back above, this 56 and gets in motion to the upside. So right now it's pausing down here. If you want to look at support, if it does break 54, it's probably going to head lower. It's below all the moving averages right now. So right now, the technicals are not in the favor of this stock, but hopefully the story changes as some of these metrics come out that you've been talking about.
Well, I presented a webinar last night on the group. We spent about an hour and a half on it with Bob Lang of Real Money and myself. And the strategy that I'm looking at is a little bit farther dated. I'm buying a 55-65 March vertical call spread. So again, it had that fundamental bullish bias. My risk is 100% controlled. For those of you that missed it, I'll tweet out the replay link. So for you guys on T3 that also want to check out some option strategies on this name, it's a really great presentation. And of course, we love to get some feedback on that as well. Moving along to AGU, which has been a strong outperformer in this group.
Yeah, this one, a little different story, holding the 8-day near the highs, but the market's a little prone to these type of beta names getting hit. And this one is provided actually alpha, but it does have beta, meaning that it moves very fast. So if you look at the chart here, you will see, look at this move. This has already cleared all this resistance. It's already gone through, big areas. It's been hugging, the 8 and 21-day moving average. But, up here, a lot of these leaders are sort of prone or vulnerable if we do pull back further. If we don't, markets need leaders. And in this space of the ags, this right now is holding best. And if you want to have a high-level stop, you look right here. If this were to start breaking below 103, I would get out of the way because you could have a quick, easy move down to the 50-day, which is right there. But again, if yesterday's low is the low in the market and Goldman Sachs had raised their expectations to 2013 in Citigroup, this is a leader in the ag space, and it will have to take out this 105 area to get some momentum. So right now, if you're uncommitted, use this as a stop. And then if you're looking for an entry and you're not in this space, I'd be a little patient and wait for the test of the 50-day, which could come into play if weakness persists. Moving
along to CF, another name that's been an outperformer, just like AGU, one of these nitrogen names. They've done well because their input cost has been relatively contained because nat gas was a much lower level this year than it has been in the past year or two. So that's one of those reasons why fundamentally it has outperformed for this year.
Okay, and this one, just as an example, that has been a leader, gave up the 8 and the 21-day and is already at the 50-day. So as I compare these charts, it looks like AGU is actually acting like best in breed for now. You go to the chart of CF and you'll see that it just pretty much broke this last little trend line here and went down to the 50. So all of a sudden, again, if you're an active trader, you want to make sure that you get in and get out the right way. And right here on this small little outside day where it opened up and closed low, maybe that was a little bit of a clue if you're trading it short term. Also, couldn't get above resistance, and now it's breaking a short-term trend line, nothing that severe, closing the lows. Here's your 50-day, here's your support going sideways. So I would say, it could try and reclaim 218, but if it can't get back above 218, there could be some more downside here, and you have some bigger support down here closer to like the 203, and then here's another moving average which comes into play. Here's your 100-day, which even some best in breed stocks like Apple hit. So it's not out of the question.
All right, well, on this one, again, being that high beta name, we're going to take a look at a risk reversal for the option strategy on this one. Moving along to Monsanto, another one that has performed really well going throughout the summer. Because the drought has spooked so many people, this is one of those companies that has genetically modified seeds, and they're looking for that so they don't get killed in terms of crop yield going forward.
Yes, this one also in the stronger side. So you have AGU, CF, Monsanto. These are the three that have been leading the way besides tactically maneuvering some of the other ones. And this one too, not saying it's faulty or game over, but some faulty signs if the market wants to continue lower. So if you look at the chart here, you will see that it failed to break out again. It failed to get through, this area of momentum. So when momentum leaves, a lot of my guys will leave. The 8 and 21-day are now curling over. It's coming into the 50-day. So I would say if you're still long this one, here's your stop. If it starts to break below this, 88 area, that's something that would concern me short term. Doesn't mean, again, look at the size of the move from 70 all the way to 92, but it could also then perhaps, make its way down to the 100-day. So at this particular point, watch this upper area. It's been hard for these upper areas to be sustained. If you want to draw a line like this, it's kind of broke its upper level momentum. So need to see where it holds and know where the 50-day and the 100-day are in all of these things.
Well, if you can stomach the volatility in these names, this really is a great space to trade for your momentum, guys. There's a lot of great option strategies, and there are also some great long-term fundamental potential. We are going to go into a commercial, and when we come back, we dive into the trenches.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the Morning Call. We're going to dive into the trenches and take a look at the restaurant names, and these have been really active over the past week or two. A lot of that fast food war going on right now. We're going to kick it off with Yum Brands.
Yes, this one came out with earnings, and it was a pleasant surprise. People using it as a barometer on China and whether it's a slowdown. I don't think you could really look too close into that, but as far as the company performed, it performed well. So technically, if you weren't in there and you watched the action yesterday, I think you had to be a little bit surprised or happy with it. So anyway, take a look at the chart here and you will see that what I like to do with an earnings play like this, you see a nice little gap right here. Let it go sideways, let it hold above. If you want to be in tier 1, be in tier 1 versus gap. Here's your support. Your support's around 69.15. After a little while, let it go sideways, let it absorb this big move since earnings. And then if you're looking to get involved for momentum after a little bit of time, you'll get that when it gets above 72. So watch to see if this gap holds. That'll let you know how the speed will be moving forward and the type of pent-up momentum that could be in there. But right now, this stock is in the game to be, for higher prices going into the end of the year. So I would continue to watch and stay with that one.
Well, if you talk about Yum, you have to talk about Chipotle. You have the whole Taco Bell, Chipotle, Mexican grill war going on. And wow, people have been in this name. It's been, you need that industrial-sized bottle of Tums on your desk for the past couple of weeks with this one. We had a nice uptrend. It broke a little bit, and then we had Einhorn come out. And when people like Einhorn Ackerman open their mouth, it's really tough if you're long.
Well, whenever you have these high beta names, you have to watch the trends. We saw a few years back when Netflix broke its multi-year uptrend, and then it just never found a friend, and it was just a trading vehicle. And this one has really turned into a trading vehicle. And if you look at the chart here, you will see, I wanted to show you this trend line. Look at this trend line that was back here, okay? Followed it the whole way up, followed the 8-day, never even touched the 21-day. And that's why I say you have to watch these trends, because when they change, it doesn't mean game over, but you take notice. So this was the first time it broke the 21-day in I don't even know how many months. So that was your exit right there. Came in, retested, couldn't reclaim it again, became very, very choppy, had this wide range bar down, which also gave you some clues that something's going on here. And then boom, look at this gap down. And then since then, I know guys in my office love to trade it, and rightly so, because it moves. So when it broke right here to the upside, nice trade, and then finally, this little ascending channel as it tried to go into this gap here. I know guys, I even tweeted about it. They made a little bit of money as it went in the gap. Then once it broke, when laggard stocks break, you get out of the way. And then here as you move down, then you had your little bear flag. Then I guess this is when he was talking about it. And really, it's flagging down here. I think this is, prone to more downside. So I would say if you're trying to play a bounce here, be careful. If this stock starts to get, give way to 280-ish, you could see more downside here. It's still highly valued. There's a big valuation there, even though there's lines around the corner. Technically, I'm saying it's more of a trade. And if you're an investor, be very careful. It looks like the overall magic has left.
Moving along to McDonald's, not only do we pay attention to the fast food wars and commodity cost, currency risk really comes into names when you look at these giant global companies, not just European exposure, China exposure, and looking at same-store sales there, but that currency risk, and it's fluctuated so much, so fast, particularly in 2012. That's another metric that we're going to have to start paying attention to even more so.
Yeah, and this one has been out of favor pretty much the whole year, so which is not usually what happens with McDonald's. People who've been at McDonald's for a decade, they're not eating hamburgers, they're probably eating steak because they made a hell of a lot of money. But as far as recently, if you look at the chart here, ever since it made this high over here, you had a series of high, lower, high, lower, high, lower, high. all the way down. And then finally, I remember when it broke, this major support, which it shouldn't have, that was your technical way out. And ever since then, it's been pretty choppy. But for the first time, some of the moving averages are curling up. It's above all of them, so there's some accumulation down here for this thing to continue. At this point yesterday, you had a little bit of a reversal. So I would say, if you're long this one, tier 1, fine, stay with it. As a trade, I don't see much of it there. But if you're looking to buy a dip or just get involved, I would say somewhere around this 91 should be a good entry. And then if ever it starts to get momentum, this is when it starts getting a motion to the upside. It's got to start clearing 94.
And let's wrap up the restaurant space with Starbucks, which is where I will be heading as soon as I head out of here. They can add another $5 with that coffee to their bottom line after Jill hits it.
There you go.
Ate caffeine this morning.
I hit mine around 3 o'clock when I started running out of shit, and they give me a banana too. But this one, I think 3 days ago, I started talking about the wedge and how it looks like it's going to resolve to the downside, that it's probably a better short than a long. So if you look at the chart here, I'll show you when that was and why. Go to the chart of Starbucks. Starbucks also, ran out of gas and started to act, not good at all technically, and then finally you had this little lower level breakout to the upside that continued, and then this wedge type pattern was coming into play right here, right at a big, some big time resistance, a pushback to where it broke down from, which typically happens. And the question was, would it continue to the upside or the downside? It resolved to the downside. I think some of my traders made some money short there too. I think I tweeted, I said below 49.90, you could see a move to the downside, and that's what's been going on here. It's below all the moving averages again. So I would just say, like, this is in a void. If you made money short, great. I would cover some. If you're looking for a long, I don't see a reversal pattern here yet. Kind of like I don't see, like, this was that reversal pattern, not happening yet.
Moving along to quick hits for some quick cash, we're going to take a look at Apple. And it's been really interesting this week because it has broken down a bit, how you get so much market commentary. What's it mean to the overall market? What does it mean to the NASDAQ? What does it mean to the S&P? And I think what people forget when they trade this name fundamentally and technically is they're so in love with the product and the whole, like, Steve Jobs aura around it, and they don't take that out of their entire investment thesis. In fact, I got to someone on Twitter where they're like, well, you know what, Apple actually is a religion to some people. And I responded back, if you think like that when you make up your strategy, you're not going to win. Like Coach, I love Coach bags. I come in with a different one every Thursday when I'm here. I will short it when I see a great opportunity. You have to unmarry yourself from that.
Well, if that's the case, we did so when it broke the 21-day moving average. Ever since it came out with earnings last quarter and started, actually, its move to the upside, it's followed the 8 and 21-day. So about 2 weeks ago with Kramer on his Off the Charts, I started to say, traders are not going to just sit in this thing and hold it. If we break the 21-day, something's going to change here. It turns more into a trade versus a hold, and we could see potentially the 50-day, and then we'll evaluate it there. And if you look at the chart of Apple, you will see that once it did break this 21-day moving average right here, once it broke below 683, it became actually more of a short than a long in a two-way trade. This was your out. It followed a very nice trend. This was the earnings. This is when it reclaimed it quickly. And then look, it followed the 8-day pretty much the entire time until it tested the 21-day and went. So when it finally broke it, you had to get out of the way. And then it wound up becoming resistance. And then, as a trade, you had a really nice 3-day trade off the 50-day back to the 21-day. And then it continued lower. So now the question is, after a nice, tactically, we talked about surgically buying it into this level, into the 100-day. Yesterday, you had a little bit of a cash flow trade above 640. It hit 645. Now the question is, what's it going to do when it deals with this major resistance? It could fill this gap. I think, guys, if it's opening below 645, you will see people probably buy it to fill the gap. But then, I would say the easy portion of this trade is over around 648. So the easy part of the bounce from 623 up to almost 650 is out of the way, the same way it happened here at the 50-day, moving into that. So at this particular point, I would just be careful because there will be guys coming out and trying to reshort this area, and real big resistance comes in around 656. So with that said, just know if you're a trader or an investor, and everyone's trying to figure out, no one wants to be caught in Apple if the high of the century is in.
Right.
But anyone that's bet that that's the case has lost, and anyone sticking with Apple has made a lot of money. So at this point, I just think being a little bit less and just know your time frame.
Well, speaking of Apple, we have to definitely take a look at Google because this has also been great for longer-term fundamental investors. It's also a fantastic trading vehicle. I do radio for Clear Channel in Dallas, and one of the questions that was posed to me, what would you rather own, Apple or Google? My answer, without even thinking about it, was Google. You don't have that product dependency like Apple has, and they also have multiple business lines, especially that mobile ad space, which they own. And we've all seen Facebook hasn't even been able to shine its shoes in that space. So not saying I would short Apple or like not own it, but if I had my choice, Google's kind of like where I would be long-term fundamentally.
What's kind of interesting is I think everyone's overthinking the
Right.
whole Apple, Google, just because they're the highest priced stocks out there. They're not necessarily one has to go up, one has to go down. They could actually continue to move together, and they've both been leaders this year. They've been just taking different turns. So if you want to trade it, yes, sometimes it's better to be in Apple, sometimes it's better to be in Google. Just like the first half of the year, Google did nothing, and Apple had a tremendous move. And then after the last quarter, Google started to get going and it started to technically act much better. We talked about 5, 6 buy areas. We talked about how this one's been hugging the 8-day and then buyable at the 21-day, and it happened again. So the trend's still there. So if you look here at the chart, you will see that when it came out with earnings, finally it broke this downtrend. It broke this area, talked about buying it around 620, and then also we try and buy stocks when they take out the highs of the year, which was 670, and then it continued all the way to almost 770. And then if you look at it close up on a cutesy level, like sometimes how my trade is traded, you will see that right here, I remember tweeting about it when it held the 21-day. It was a good buy into it, and then look what happened. Here, you had that little short-term top. Some guys started to short it when it went underneath 754. So I said, you know what? Yesterday I tweeted, I'm like, around 630, below 740 into the 21-day, probably a good spot to cover some shorts, maybe test some longs. Yesterday the market was red, it was green, and now it's bouncing right back into this area. So I think it's a cute trade. Traders will probably sell it if they're not committed to it here, and then if it can't reclaim this 750 and turns down, maybe that trend changes and the 21-day doesn't hold and it corrects a little further like the rest of high beta land. So at this point, still hugging the 21-day. That's what traders are going to use as its roadmap. And if that changes, you change with it. But unbelievable, it was my high beta play of the year. But for 2 quarters, timing-wise, it wasn't there for the end. This so far, it kicked in. So it just shows you that you just have to keep on alert. When things change, you change. Same thing happened when Apple became more of a trade versus a hold. But I'm sure that'll change again.
Well, I'm happy to see you had your fundamental long-term hat on. Moving along to JP Morgan, all eyes on Jamie Dimon tomorrow because what he says is really going to set the composure and tone for the rest of the year. I think it really matters what these big banks are saying because they just cross every sector.
Right, and housing's getting better, so maybe their mortgages are able to mark them back up. So a lot of people want to just know also the quality of the earnings.
Right.
Are they just taking the marks that they put down at 30 cents on the dollar to 45 cents or whatever it is? So they're going to be looking at that. If you look at the charts, everyone's expecting big things. So hopefully they deliver, and hopefully if they do deliver and it opens up, it's not a gap up. Sell. We've seen that before. I've talked about the areas to buy JP Morgan many times, and here was one of them, and then into the 21-day was another one. And look at this. Market just pulled in for 4 days. JP Morgan didn't pull in. It's holding in there really well. So if it can get above this, just say 42, 44 and stay above it, you're going to see a move right back to this 44 to 46 area. And if that's the case, maybe yesterday's low is the low in the market moving into, year end. If it's not, we could still see some choppy downside type of action.
Moving along to refiners, we're going to look at Valero. What is going on with the gas prices in California? I'm certainly hoping it doesn't shift over to the East Coast. It's just, it's unbelievable. Yeah,
it's like oil pulled in and gas went up, and they're not even correlated anymore. No one really even understands, except for they think everyone's making all this money, but who knows? Anyway, with Valero, yesterday was a horrendous move. If you were watching it, I think guys made money short this name. You take a look at the chart here, you will see that, boom, here was your outside day. This is a day to take notice when it opens up, closes on the lows. And then here is a level, broke a key level, sliced through the 50-day, didn't even look back. So to me, this is an avoid. Some guys probably made money if they said, okay, I'm out of it here. Let me see if this level holds. And when it didn't, boom, it closed on the lows. And just real quickly, I just want to go over CVX yesterday because a lot of people got blindsided by their pre-announcement. And this is what happens. Unfortunately, this is the market. Stock was up here holding in really, really well. I know I was playing it for a breakout, and thank goodness I wasn't long when this happened because if it probably broke out, I would have been long overnight. But it didn't, so I got flat, thank goodness. And then boom, gap down, closed on the lows. That means that nobody was really expecting this at all. Did not get a pass. So this one's going to need some time. And I'm sure XOM also, is going to need time as this ascending channel right here just broke a little bit to the downside. So here's your 50-day on that.
And let's wrap it up with Walmart. This is one of my favorite charts to watch because you look at the 10-year, then you look at what it's done in 2012. It's one of Vanessa's favorite names as well.
Vanessa's?
Yes. Every time we wrote up the morning call, she's like, let's take a look at Walmart's charts.
Okay, yes, and she does love it, and it's been our retail stock of the year. So, I hate to say both of them while we go over them, but totally two different stories. Walmart, because of the 10-year, decade-long base that it had, and then it broke out. And yesterday was a little tricky. Yesterday, it tried to break out and extend, and then when they started talking about 2013, people were like, does Walmart deserve to be on historic highs? So if you look here, it's still in the game. It's still, holding higher. I hate, when you have to buy higher or chase. This was that level we talked about, 62 to 75. It's there. It's been going sideways. It's been hugging, all the moving averages. It tried to break out yesterday, couldn't really extend. So I would just say, short term, as long as it stays above this, just say 74, 71 area, stay with it. If it starts trading below, maybe take some profits. This has been a very, very strong stock this year, and there's a lot of underlying strength, and it should continue, just like Home Depot did on its 2-year run until finally, stalling a bit after Monday's faulty action.
All right, guys, have a great week trading. Good luck going into JP Morgan and Wells Fargo tomorrow. Catch Scott at the end of the day as he wraps up the charts for us on Real Money Pro, Options Profits, and T3Live.com.